Welcome to TFN's Smart Trading Action Alert. I'm Laura Cadden. In a year characterized by booming stock markets around the world, it's easy to overlook those markets that don't make it to the mainstream media on a daily basis. Markets like South Korea's Kospi. This index has gained over 50% year over year. And yet, despite what would be an amazing gain in any other year, even conservative investors like Warren Buffett consider South Korean stocks attractive and cheap. One factor behind the popularity of Korean stocks is the falling dollar. But the Seoul Stock Exchange has left the stage of an emerging market far behind and is now entering that of a developed market. To get a more accurate picture of what's been going on in the Kospi over the past year and where to find profits in the coming months, I've invited Martin Hutchinson, Head of Investment Research for the Oxford Club's The Money Map Report. Welcome, Martin.
Thank you.
So analysts have considered the recent surge in the South Korean market the result of low interest rates and a cooling real estate market. What other factors do you see?
Well, there's a real underlying growth there, which is basically comes from productivity. Because South Korea, along with Taiwan, have the highest productivity growth of any rich countries in the world, around about 4%. And if you look at the US, you're talking about just over 2%. Europe, you're mostly talking about just under 2%. The Indias and Chinas of this world have higher productivity, but they're very poor countries. It's basically just catching up. So Korea's productivity growth of 4% means that Korean exporters are continually becoming more and more competitive against the world's other companies, and therefore inevitably are gaining market share and making Korea richer. And of course, with productivity growth that high, the economy grows fast too.
So what would account for the recent surges we've been seeing, though?
Well, I think that's largely domestic. You see, this isn't a fashionable market internationally. And so what you've seen is Korean investors who got burnt in the property bubble a few years ago and had a credit card crunch as well, have now decided that, yes, their domestic market is good value. And they're right, it is. It's around about 13 times earnings, which for a market with this kind of growth is fantastic.
Well, speaking of its growth, South Korea just revised its GDP forecast for growth to be 4.6% this year. Where does this growth originate?
Well, 4.6% is actually almost a recession. They were worrying about slowing down this year and, below their usual 5 or 6. The main growth driver for South Korea is, of course, the export sector, the high technology, and indeed the automobile industry. But you've also got growth because of China, because like Japan and Taiwan, the big South Korean companies have the ideas themselves, do the R&D themselves, and then get it manufactured in China. And of course, China's just over the border. It's no distance away at all. A lot of South Koreans speak Chinese. So this is a very effective and powerful driver of growth in South Korea.
Now, speaking of coming changes, the presidential elections for South Korea are occurring this December, correct? Mm-hmm. What kind of influence, what do you think the outcome is going to be and what influence it'll have on the market?
Well, I think that could be another bullish factor because the current government of Roh Moo-hyun has been pretty anti-business. I mean, 3 of the top chaebol chairmen have been imprisoned. And frankly, if you're imprisoning the top chairman of the major companies, you're not really running a good pro-capitalist economy. And the opinion polls are showing that the opposition Grand National Party's candidates are about somewhere at least 20% ahead of the governing party's candidates and look pretty likely to win a decent majority. And there's the December presidential election, there's then an April parliamentary election. So between the two, I think we'll see a takeover by the much more pro-business Grand National Party. That's only moderately important for South Korean companies themselves because how much damage can politicians do unless they really mess you up? But of course it could produce a re-rating of the economy because suddenly people will see that South Korea has got a really good pro-business government. And whereas now you're sitting at 13 times earnings, with this growth there's no reason why it shouldn't sell at 18 or 20. And of course that's really free money, that re-rating.
What kind of pitfalls do you perceive for the South Korean market? I mean, it looks like they weathered the U.S. subprime crisis just fine, but with their slowing property.
Well, they had a property crisis a few years ago. They also had a credit card crunch. About 4 years ago, they went out and cheerful chaps sent out credit cards to everybody, and then of course half of them didn't pay because everybody took credit cards. They thought they were free money. And needless to say, that meant that the Koopmin Bank, the biggest bank there, made a loss in 2003. But you only make that mistake once. Citibank made it back in 1980 here. And so the Koopmin banks figured out the credit card business. And, you know, they've basically recovered. And you've got some consumer-driven growth in Korea. You've got people getting richer. And on the whole, I don't think there's a problem. I think the only big problem is if you had a major world downturn, possibly led by China, with imports of Asian goods dropping. But I don't see that happening, and until it does, I think Korean prospects are very good indeed.
So where would you recommend our viewers invest their money?
Well, I think there are a number of South Korean companies that are very interesting. You can buy the economy as a whole with the Koopmin Bank, which is the biggest bank there, and that's on about 11 times earnings, and this earnings are growing. It's clearly got some growth. It managed not to do what a lot of other banks in foreign countries did and invest lots of money in subprime mortgages. They saw that one coming, perhaps, having had their own problems. And then secondly, you can buy the power company, Korea Electric Power. Koopmin Bank is KB, Korea Electric Power is KEP, both on New York. Korea Electric Power is on about 9 times earnings. By definition, more or less, the power growth will go up about as fast as the economy. So if you've got 9 times earnings and rapid growth, that's pretty good. And then you can be in something sexier, perhaps SK Telecom, which is SKM. That's the biggest mobile phone company in Korea. There's a neat trick on that one. It had to hold its market share towards 50% because Mr. Roh doesn't like the chaebol, and SK Telecom's part of the Sungkyong group. But that market share has begun creeping up over the last few months, and of course at 50% it's pretty dominant. And I think if you get a government change, you may well see that they can get some more market share in Korea. They're also the 3rd largest mobile phone company in Vietnam with about a 15% share, and that's where you've still got explosive growth because it was a very poor country that's growing at 10% per annum. It's one of the few ways of playing Vietnam, which has done very well over the last 18 months. And then they also have a venture with the 2nd largest Chinese mobile company for the 3G business. So again, you're talking about a company selling 14 times, 15 times earnings that's really in some very exciting technologies in the most exciting markets in the world. I think it's very attractive.
Well, very interesting information. Now, you've provided some information for me to post on our website. I believe it's a report written by your colleague, Horatio Marquez, correct? We'll make sure we post that up then.
Excellent. Well,
thanks
very much
so
indeed.
much. We'll post that information, as I said, on the taipanfinancialnews.com website. Just look under the Investment Strategies section for this and other valuable investment and trading information. To learn more about Martin's research service, the Money Map Report, go to www.moneymorning.com. Please join us next week for another opportunity for profits on TFN's Smart Trading Action Alert. For Martin Hutchinson and Taipan Financial News, I'm Laura Catton.